Which real estate investment trust ETF is better, Schwab's or State Street's? Let's take a look. SCHH is $18.66. And we could break this all down by clicking on each little category and then clicking on the State Street one and going over their ETF and clicking on every little category. But there's a better way to compare these two ETFs, and I'm going to show you how to do it right now. The very first thing you're going to do is you are going to go right here and you are going to click on the menu right here and you're going to find this template, which ETF is better. This is what the template looks like, but don't worry, there is a clickable version right here. And we're going to use Seeking Alpha to find all of the information that we need on this template. And then you'll know how to do your own research in the future when there are two ETFs of a similar type that you want to compare. Here it is side by side, and you can see that the price difference is pretty dramatic, but cheaper doesn't always mean better. Now, over the last 1, 5, and 10 years, you can see that Schwab is down, and then up 10%, whereas State Street is down in the last year, up in the last 5 years, although it's just a little bit, and up almost 19% in the last nearly 10 years. Both funds are very, very large, having over $5 billion in assets under management, and both funds pay dividends that are pretty similar, 3.53% to 3.72%. Over the last 5 years, Schwab has only raised their dividend 0.85%, which is not very much. And State Street really honestly isn't that much better, but they still have raised theirs a little bit more. Both pay quarterly, both have very low expense ratios. And because they're in real estate, both have 100% of their investments in real estate. And you can see that their top 10 holdings are relatively similar. There are some key differences though, which is that Schwab is investing in 121 companies and State Street is only investing in 34. Generally, ETFs are a great investment because they give you diversity. However, when they're sector specific, like a real estate investment trust ETF only, you might find that sometimes it may be better to just buy a few of the companies in that fund that are the strongest performers. Sometimes owning too many stocks in one sector alone means that some are great, but a lot are duds, which bring down the overall performance. Let me know in the comments below if you prefer a real estate investment trust ETF or just real estate investment trust stocks, and don't forget to smash that follow.